Hello everyone. Today we are going to talk about option assignment and exercise. It's important to understand these things before you get into option trading. So let's begin by defining the two terms. To exercise an option means to put into effect the right to buy or sell the underlying security that is specified in the options contract. What is assignment? An assignment is the transfer of an individual's rights or property to another person. For investors or traders, the most prominent example occurs when an option contract is assigned. The option writer has the obligation to complete the requirements of the contract by taking accountability of the shares in the option contract. For every option buyer, there is an individual who wrote those options known as the option writer, or more commonly known nowadays, the option seller. When an option buyer exercises his option, the opposite scenario happens to the option writer when assigned. Let's get straight into an example to clear things up. For a call, the person who purchased this call can exercise his option and purchase 100 shares at $50, since the strike in this example is $50. The option writer would then be assigned and he would sell 100 shares at $50. So wherever the stock is, let's say it's at $60 for example, the call buyer would have purchased the shares at $50 and now has a profit of $10 minus the cost of the option. On the other hand, the option writer would sell at $50 and the stock is trading at $60, so he would have lost $10 plus a premium he collected. The option writer will still get to keep the premium. For a put, the put buyer would sell 100 shares at the strike price of $50 if he exercises the option. The option writer would then purchase 100 shares at $50. Now, why would someone want to exercise an option? They would want to exercise an option if they want to take accountability of the shares, whether if that's to buy or sell the share. Let me give you another quick example just in case you didn't quite catch the last one. For a call, the option buyer might have purchased a call with a strike of 100 when the stock is trading for $98. And now the stock rises to $120 and he wants to receive those shares, so he exercises his right to own the shares at $100 when the stock is trading for $120, which gives him $2,000 of profit minus what he paid for the option. One issue you encounter by exercising an option is you completely take all extrinsic value off the table, which is the negative aspect of exercising an option. But the person who exercised the option might want to hold on to the position long term, so he feels like the stock may increase substantially in the upcoming years, and he is okay with exercising it. The option can automatically be exercised if it's 1 cent in the money at expiration. That means if you write a call option for $50 and the stock goes to $50.01, you can get assigned. We also have an example here of a $40 put, which can be automatically exercised at $39.99, which would then mean the option writer would be assigned 100 shares at $39.99. Now, can an individual exercise an option that's out of the money? The answer is theoretically yes, but that would be ridiculous because he would lose money doing that. So most likely that won't happen. And if it would happen, then happy birthday to you because you get to keep the premium and get assigned a profitable position. One thing to be cautious of is the fact that options can be exercised on the Friday of expiration up to 1.5 hours after closing bell, which means 5:30 p.m. So if you think you're safe on Friday at closing bell, because options cannot be traded, you might not be. If the underlying closes out of the money, and there is some news after hours, and the underlying moves in an unfavorable direction for you, you may still get assigned as the option writer, so be mindful of that and pay attention. Now let's move on to early assignment. Early assignment can happen to an option writer, and believe me, these are not fun. An early assignment can happen if the option buyer wants to exercise the option before expiration. This can happen when the underlying moves in the favorable direction for the options buyer. Typically, this will happen towards the end of the lifespan of the option when extrinsic value is low. As the option gets closer to expiration, the extrinsic value lowers. A call option purchased that has a strike price of 105 when the stock is trading for 100 may be around $400. Tomorrow, the stock moves up to $110, and now your option is worth $800. If you sell, you get $400 of profit. If you exercise the option, you'll get $500 minus what you paid for the option, which was $400, and now you're left with $100 profit from exercising the option. Would someone exercise the option in this scenario? Probably not, seeing how it has so much extrinsic value. Now, to use this scenario to understand early assignment, let's say this guy now has 3 days left till expiration, and the stock price is the same, and the option is now worth $550. But he wants the shares because he believes the stock will rise significantly in the next couple of years. He could exercise this option and purchase 100 shares at $105 when the stock is trading for $110. Now the option writer gets assigned and essentially sells at $105, and the stock's trading for $110. So he loses $500 plus the premium he collected, which was $400, so he really only loses $100. And just a fun fact, options are assigned at random by the OCC, by a lottery process, so the same person who buys your call might not be the same person who exercises the call for you to get assigned. Don't have enough capital? Let's say there's an in-the-money call, and you don't have enough capital to take assignment. What happens? Well, if you were assigned shares and you don't have enough capital to cover the shares you were assigned, this would be known as a margin call. You would need to buy or sell to close the position immediately. If you don't, your broker will most likely do it before the end of the trading day. And that's it for today. So now you know about options assignment and exercise. I hope this video helped. Thanks for watching. Make sure you like, comment, and subscribe. See you in my next video.